All right, you're seeing some things in the news, but maybe you're not. The question is now a good time to refinance? I'm going to answer that by showing you 5 reasons why you should, and if you don't fit into one of those 5 reasons, then you probably shouldn't. This is the Happy Home Buyer number 10, and is it time to refinance? So it's Wednesday. I'm typically going to be in here showing you the apples to apples rate comparison, which I will post the graph for later. Spoiler alert, interest rates went down just a teeny tiny bit, which means they're very similar to what you saw last week on both a national level as well as for us. But what that really means is that we're right there near the low rates that we saw right after the election. If you recall, right after the election, rates shot up for all sorts of fun reasons. And since then, they've just been kind of clawing back to the low rates that we see here today. So that's prompted lots of phone calls into me. They're like, hey, is now a good time for me to refinance? And really, there's 5 good reasons to refinance right now. And if you don't fit into one of those 5, then probably not even worth the phone call. So let's jump right into reason number 1. Do you have a loan, any loan, with mortgage insurance that you've been paying on for at least 1 year? If you do, it's a good thing, good opportunity for you to give me a call. Reducing or removing mortgage insurance in conjunction with lowering your interest rate is about the biggest savings that we can offer when doing a refinance. So think in your head, do I have mortgage insurance? Yes. Have I been paying on this loan for over a year? Yes. Give me a call. Let's take a look at it. Let's see if your home is appreciated. Let's see what your interest rates are. Let's look at the entire piece and see if we can save you money. Do the numbers, see if it works. Simple as that. On to number 2. Do you have an FHA or a VA loan with an interest rate over 3.875? So you're sitting at 4.0, 4.125, 4.5%, 5%. Whatever it is, if you've got an FHA or a VA loan above this amount here, chances are you should give me a call. We can look into potentially saving you some money, especially if it's VA. VA has the interest rate reduction loan. That allows us to drop those interest rates down. Sometimes we can do it without an appraisal. It's just about the easiest loan you can possibly do. So if you've got one of those, give me a call. Now is probably a good time to look into saving that money. Number 3. Along those same lines, if you've got a conventional or a jumbo loan above 4.375%, so you're paying 4.5%, 4.625%, whatever that is, that's a high enough rate that now is a good time for you to give me a call. As you'll see on the interest rate comparison chart that I'm going to share later today, our conventional interest rates right now are about 3.75% for the scenario that we're going to share. I'll share the APR in that piece as well. So I mean, you're looking at a pretty big swing from being in the upper 3s to being into the mid 4s. That's when you can start to save some money. So conversely, if you've got a jumbo at like 4.25%, you're probably going to give me a call and I'm going to say it may not be worth the refinance right now. So just keep that in mind. That's why I'm sharing this with you. And that means number 4. On number 4, a first and a second loan. So if you've got a first and a second, like maybe you used a first and a second to purchase it, or you had a first and then you added a second to add a pool or something like that, now's a good time to give me a call. Let's look at potentially combining those two and seeing if combining them saves you money and potentially offers you a better long-term mortgage. A lot of times those second mortgages, they're going to be adjustable rates. They're going to be potentially a higher interest rate. Sometimes they're a shorter term. There's a bunch of different reasons why if you've got a first and a second, now's a good time to give me a call. We might get you one nice, pretty loan that's going to make life a whole lot simpler, potentially less expensive, and potentially a better long-term option for you there. So that's number 4. Last one, number 5. If you want to try to pay off your loan years in advance, let's say you've got a 30-year loan. You're 4 years into it, and you're thinking, hey, it'd be awesome if I could pay this off in like 15 years instead of 26. Let's look at that. I'm talking to a few people right now where when we did the math, they're already, I think, 5 years into a 30-year loan. We did the math, dropping them down to a 15-year loan is going to save them 10 years on their entire span. Their payment only went up $125 in one case. So would I spend $125 extra dollars to take 10 years off of the total number of mortgages I would pay? Yes. Yes, I would. So that's something for you to look into. Not everybody's going to save money there, but if you want to try to drop the total number of years you pay, now's a good time to look at it because those shorter term loans, the 20 years, the 15 years, they have amazing interest rates right now. So that's why that particular plan works for us now. So that's it. If you fit into one of those 5 categories, now is probably a good time for you to give me a call. However, If you don't fit into one of those categories, it's probably not a good time for you to refinance. If you've got a FHA or VA loan in the mid to high 3s, probably not a good time. If you've got a jumbo or conventional loan in the very low 4s, probably not a good time. But if you are curious, there's 5 reasons why you should give me a call on it. If you need absolutely anything else, just give me a buzz anyway, 480-744-6040. I understand this week or today's Happy Home Buyer was really for those folks that have already owned a home, but it's important that they stay happy as well. Again, if you need anything, give me a call, and we'll talk to you again soon. Thanks.